Welcome to HipMojo Show 26. I'm your host, Ashkan Karas-Rushan.
And I'm Rebecca Brayton.
All right, so Rebecca, how much time do you spend on Facebook? Be honest.
As you're my boss, I don't spend that much time on Facebook, especially at work.
Okay, when you're at home, when you're doing your own, time-wasting exercises.
Truly, I spend most of my time on Twitter, to be honest with you.
Yeah, same here. I've become quite the Twitter addict, and a lot of my friends are pointing it out. Although I say it's really more my newsroom. That's my excuse. Okay, so I don't spend that much time on Facebook either, but it is a rather popular site. And this week they filed for an IPO. So we just wanted to cover that a bit, and I believe you have some questions.
Yeah, so this led to a lot of questions from a lot of people. So first things first, how does Facebook actually make money, and how much do they generate?
Times have changed. Even internet companies make money. So Facebook generates largely money from advertising, which is the #1 way that internet businesses generate money. But they also have been building up their credits or payments business. They're going to make $1 billion in net income, basically profit, off $3.7 billion in revenue. Of that 3.7, 3.2 comes from advertising. And the payments, just to explain the payments credit side of things, a few years ago, video game maker Zynga was basically leveraging the Facebook platform and monetizing that experience. And Facebook said, time out, if you're going to be charging people, you can't use your payment system, you got to use ours. So a large portion of that growth has come from, of the Facebook credit payments growth has come from Zynga, and Zynga generates 12% of Facebook's revenues.
Okay. So according to the IPO, how much is Facebook raising, and what is it worth, and is it a deal?
Is it a deal or no deal? Well, Facebook originally was rumored to raise up to $10 billion. Let's actually go back. What happens in an IPO, or initial public offering, is a company that previously was private basically says, we might have some investors, venture capital firms and private investors and employees, but we're now going to sell as a first offering to the public. And you basically say, let's say if you're worth $100 billion, you then say, if we're going to sell 10% to the public, then we're going to get 10% of $1 billion, $10 billion to go and hire more staff, expand, buy other companies. So it was rumored that Facebook was going to raise $10 billion by selling 10% of its stock at a $100 billion valuation. That's not actually what's going to happen, although it's surprisingly close. Facebook is only going to raise $5 billion. And it's still a lot of money. It's the biggest tech IPO.
Poor Mark Zuckerberg.
Yeah, poor Mark Zuckerberg. We'll talk about Mark Zuckerberg in a bit. But basically, Facebook analysts are giving it a valuation of anywhere from 75, probably low range, 85 billion, to as high as 100 billion. And historically, investment bankers usually price an IPO below its fair value so that the stock pops, because that's great for marketing. So this being said, Mark Zuckerberg, who is one of the few young founder CEOs who stayed at his company as the CEO, almost 10 years, 8 years, and he'll be taking one of the biggest internet brands public, so that hats off to Mark and his team. He owns 28% of the stock, so he's worth as little as 16 billion to as high as like 30 billion, making him, automatically overnight one of the richest men on earth, and he deserves a lot of praise despite what the cynics might say. Okay, is it a deal? Well, that's the big question. Is it a deal? Yes and no. Facebook is going to become the bellwether, the bellwether of the internet stock. So if right now somebody has been investing in Google because they want to have exposure to the internet, well, Google's like an 11-year-old, more like a 12, 13-year-old company. It's been public for almost a decade. So Google is somewhat mature as a stock. So if somebody really wants to pour money into Facebook, even though Facebook is expensive from a price to revenue or price to earnings perspective, it will get a lot of demand for its stock because people are willing to be patient. So even if it's going to be a very expensive stock relative to earnings, investors won't care because they're like, listen, this company's going to hit 1 billion users this year, so we're willing to wait for the earnings to catch up to the price. It's a deal in that sense, that demand will far outstrip supply of stock, but it's not a deal from a purely financial perspective, but who cares about that?
Fair enough. Is Facebook really worth all the hype? Are they going to keep up with the momentum?
Okay, well, they're going to keep up, I think, with the momentum from a user perspective, because I do think, though, that they're going to become the natural monopoly in terms of, like, profiles and all that. Is it worth the hype? Put it to you this way. Their revenues grew from 2009 to 2010 by 150%, but then from 2010 to 2011, they only grew by 50%. The problem is, as you get bigger and as your revenues get bigger, the growth is harder to accomplish. So even though at face value, the relative percentage seems like it's slowing down, the absolute numbers are staggering. $3.7 billion in revenue for $1 billion of profit is a profit machine. And it's true that today, Facebook, as it goes IPO, is generating more income. It's generating more profit than Google was generating revenue, top line, when Google went public. There is a difference. The overall size of the advertising market online is so much bigger today that you are comparing apples to oranges. My guess is that a lot of companies that went IPO that were internet companies like LinkedIn, like Groupon, and even Zynga, which is more of a video game, but let's say, it's still a tech, new media-ish stock, I think most of those flopped. And investors will probably take whatever money that they would have put in those assets as well as Google, and they're going to put it in Facebook. So I think it's going to be a massive company from a consumer adoption perspective, as it already is, but that will continue. Financially, I don't think it's going to put up the numbers that people see in the Apple and Googles, even though you're comparing apples to oranges. But from a purely stock perspective, it'll do very well because people will want to put money in there. Everybody knows Facebook, even if they don't spend time on it.
Right. So, I mean, we've talked about Google already, but everyone is comparing this IPO to Google's. So is that kind of a fair comparison, and how do they stack up?
Okay, I mean, it's fair in the sense that you have two internet companies who lead their respective industry, respectively search and now social network. It's fair to say, well, how much money were they generating? Again, Google was generating $960 million in revenue and $100 million in profit when it went IPO. Facebook is generating $3 billion, or $3.7 billion in revenue and $1 billion in profit. So Facebook wins there. However, I think search is a much easier industry to monetize. Somebody searches for Madrid, you got a result for hotels in Madrid. That's easy to monetize. I've never even looked at ads on Facebook, let alone clicked on an ad on Facebook, even though Facebook claims in their prospectus in the S1 that they helped Procter & Gamble sell 9% more deodorant. I could tell you that WatchMojo has helped Procter & Gamble sell whatever. It doesn't necessarily, you could spin the facts is what I'm getting at, not being too cynical there. The point I want to make is it's fair to compare it to Google in terms of where Google was, but it's actually unfair in the broad macro space. Google basically brought back the internet from the disaster. It rose from the ashes of the NASDAQ meltdown and the dot-com bubble bursting. So when Google IPO'd, it made investors realize that, hey, the internet's actually coming back. Facebook, you could almost argue, is like in the middle to late stages of a bull run in internet assets already. So from that perspective, it's really very, very different. But in terms of headlines, in terms of from an outsider, you look at it, it's the biggest IPO since Google, without a doubt.
Okay. Is there anything surprising about the S1?
Yeah, I mean, Zynga generating 12% of Facebook's revenues is surprising. This is what was most surprising. Half of the people who are users on Facebook visit the site every day. That's not bad. But what's more interesting is half of the users on Facebook visit the site on their mobile devices, their iPhones, their Blackberries, their whatever, Windows 7 phones. So what's interesting, though, is that Facebook is yet to make any money from their mobile because they're not putting any ads. So that was very surprising. Other things, a few people on Twitter, ironically, where I followed, 3 stats that's interesting. Facebook, with a $100 billion valuation, with 3,000 employees, is worth 3 times the 4 largest ad agencies combined, who have 300,000 employees. Another one, Facebook revenue per employee, $1.1 million. Walmart's revenue per employee, $200. And last but not least, Apple's EBITDA was $45 billion. Facebook's was $1.8 billion. But Facebook is going to be worth 1/4 of Apple. So again, random stats from the Twitter community, but pretty interesting. Long story short, I guess, not that this should be treated as financial advice, purely for entertainment. Go speak to an expert. If you have a bunch of money lying around, should you put it into Facebook? If you have money and you're willing it to go to zero, and you were going to be investing it, let's say, in other internet companies, I think Facebook is a good bet, and I'm going to end it on this analogy. When Google went IPO, I said $100 a share, which translated to $23 billion valuation. I went back to my roots in finance and said, that's too expensive. So I kept my money in all these other internet stocks that seemed more fair priced. I got shafted. Why? Because everybody basically took money out of other search companies and other media companies and Yahoo and all that, and basically put the money in the top horse, which was Google. So for that reason, history repeats itself. I would say Facebook is probably a stock you should consider, but talk to your analyst. Look into your crystal ball. Don't take this as financial advice.
Fair enough. Okay, that's HipMojo Show 26. Visit us on Facebook.